Have you ever wondered what you'd do if a $1,000 investment suddenly turned into $380,000? It sounds like something straight out of a movie, right? Well, that's exactly what happened to a caller on The Ramsey Show. Their story is the perfect mix of luck, smart investing, and a dilemma that many of us might face. When do you cash out, and how do you use that money? Today, I'm going to walk you through what the caller shared, the advice they received, and the lessons we can all take away from this incredible situation. Here's what happened. Back in 2011, this caller, fresh out of college, put $1,000 into Tesla stock. At the time, Tesla was just a small electric car company, far from the powerhouse it is today. Fast forward to now, and that $1,000 has grown into a jaw-dropping $380,000. The caller explained that they didn't add a single penny more to that initial investment. It was pure growth. But here's where the story takes a turn. They're currently sitting on a $288,000 mortgage. With this unexpected windfall, they're now wondering, should I sell my Tesla stock and pay off the house? Or should I let it ride and see how much higher it can go? It's the kind of decision that's both exciting and stressful. On one hand, they've already won by turning $1,000 into hundreds of thousands of dollars. On the other hand, the potential for even more growth is tempting. After all, Tesla has been a star performer. The hosts on The Ramsey Show had some strong opinions. First and foremost, they emphasized the importance of consulting a tax professional. Why? Because selling $380,000 worth of stock means paying capital gains taxes on nearly $379,000 in profit. That's a hefty tax bill, and it's crucial to plan for it. One suggestion was to sell the stock in smaller chunks over several years, minimizing the immediate tax hit while gradually using the money to pay down the mortgage. For example, they could sell enough stock each year to stay within a favorable tax bracket, potentially saving tens of thousands of dollars in taxes. The host also brought up a critical point about risk. Holding on to a single stock, no matter how successful it's been, is always a gamble. Tesla's stock price is notoriously volatile, and anything from a tweet by Elon Musk to market-wide disruptions could send it plummeting. They argued that moving the money into diversified investments, like mutual funds or index funds, would significantly reduce risk while still offering solid returns. But let's set the numbers aside for a moment and talk about what this really means. The caller mentioned that they've been married for 13 years, have a solid household income of $275,000, and have always lived within their means. They've even managed to save up a large emergency fund. So, why does this decision matter so much? It's about peace of mind. Imagine waking up every day knowing that your house is paid off. No mortgage, no debt, just the freedom to use your income for whatever you want, saving, investing, or enjoying life. The hosts painted a vivid picture of what that kind of financial freedom could look like, and it's hard to argue with the appeal. One host put it perfectly: you've already won. Why risk it all when you could cash out, pay off your house, and never worry about Tesla's stock price again? This story isn't just about one person's windfall, it's a lesson for all of us. First, it highlights the power of investing. Turning $1,000 into $380,000 doesn't happen every day, but it's a testament to what's possible when you take calculated risks and hold on to your investments for the long term. Second, it's a reminder about the importance of diversification. While Tesla has been a fantastic investment, putting all your eggs in one basket is rarely a good idea. By spreading your money across multiple assets, you can reduce risk and build wealth more sustainably. Finally, it's a lesson about priorities. Sometimes the best financial decision isn't about chasing the highest returns. It's about reducing stress, achieving stability, and creating a life that feels secure and fulfilling. So, what would you do in this situation? Would you sell the Tesla stock, pay off the mortgage, and enjoy the peace of being debt-free? Or would you hold on to it, hoping for even bigger gains? Let me know in the comments. I'd love to hear your thoughts. If you found this story helpful or inspiring, don't forget to like this video and subscribe for more personal finance deep dives. Thanks for watching, and I'll see you in the next one.